not ruled out.
All right, Ed Yardeni is president at Yardeni Research, and we also have Taimur Baig, managing director and chief economist at DBS Research Group Research, joining us as well. Gentlemen, great to have both of you here. Thank you very much. Ed, just to begin with you, I mean, what should we make of the rallies like overnight? I mean, not about what happened last night, but you tend to get these once in a while. I kind of described that as markets swinging between soft and hard landing expectations, right?
I think you're right.
Your sense, yes.
Yeah, my sense, the analogy I would use is a kind of a tug of war between the bulls and the bears. And from January 3rd until June 16th, the bears were clearly winning the tug of war, gaining ground, if you will. And then since June 16th until now, the bulls have been gaining ground. I think now it may be a standoff where they're going to keep pulling on the rope and maybe not make much progress. In other words, the market may just go sideways for a while. Everybody's debating whether it's going to go higher or lower. There's that third option that it might just simply go sideways for a little while.
Okay, Taimur Baig is also with us. Taimur, good morning. Thanks for joining us. Just reading this call. Of course, the market will watch out for what Fed chair has to say at Jackson Hole, and then perhaps it would be easier to guess. I guess it's never easy to guess, right, what the FOMC delivers. But what's your base case expectation?
My base case expectation from the Fed is for 50 basis points and to give very little clue as to what they're going to do in late September today. So regardless of what the Jackson Hole talks cover, I don't think that'll be a very good marker for what the Fed will do at the end of September, simply because there is just way too much uncertainty, whether it is on the earnings side, because corporate profitability at the end of the day is an important ingredient toward the understanding of how the economy is doing. And there's a push and pull there. You've got a lot of negatives coming from a higher cost, and there's still lingering positives from pretty resilient demand. So are we going to have sharp decline in profits, or are we going to have modest decline in profit in line with a tightening monetary condition? So that's one issue. I think we have plenty of data points in the next 3-4 weeks to come that will determine that aspect of the economy. And then, of course, there is a big question of inflation and what's happening to rents and what's happening to wages. Again, today is not the day to make a very confident call as to what will happen on September 22. It's quite far away.
Okay, Taimur, welcome to India, by the way. I hear that you are coming to us live from Delhi, so good to have you here. How has your trip been so far? And, in the context of what's happening across the globe, right? We're seeing sharp energy issues, the costs escalate across, whether it's China, even in Europe, GDP forecasts have been brought down. At a time like that, do you think that more money will come into markets like India? I'm asking you more from an economy standpoint. What are you forecasting?
So it seems to me that the FDI outlook for India is as bright as ever. And I think the morning newspapers in India are a very good testament to that. We're seeing, renewed vigor in the manufacturing space and pharma space and overall hard infrastructure space, a lot of money coming in. Portfolio is a complicated story. Typically, high rate cycle coming from the US, followed by the rest of the world, is a negative for emerging markets. And India is no exception. At the early part of this rate hike cycle, we saw wholesale selling of Indian equities and bonds by foreign investors. Things have changed, though. I think when we look at the data of the last couple of months, clearly there's renewed interest in Indian valuations. Not that Indian market is cheap by any measure. When you look at across the emerging market space, India is attracting a very strong premium. You would have to be very confident about the near and medium-term outlook to put additional money in Indian equity markets on a broad-based basis. I'm sure there are specific stocks that are attractive and that are not attractive. But overall, the market is already pricing in very good days ahead of India, and India would have to deliver on that.
India would have to deliver on that. Ed, as many have pointed out, when you're speaking at an event like the Jackson Hole, right, amongst other central bankers, your peers, you want to sound more than anything else credible, right?
Absolutely.
So should there be any doubt in terms of what, now of course, how the markets interpret it, what is the bar for being considered hawkish? I mean, that may depend, that may vary, but the message should be that we will do whatever it takes, right? Maybe need not say the words that Mario Draghi had once said many years ago,
Right.
but should we expect that kind of a message?
Absolutely. I think whatever it takes really is the theme that Fed officials have been pushing. Even the doves, some of the people who've been very dovish over the past couple of years, they're squawking like hawks. And so they're all saying that they've got to do whatever it takes to bring inflation down, that high inflation is not conducive to economic growth. It's bad for the purchasing power of consumers, especially low-income consumers. So I think the Fed has got really no choice but to talk tough. But I think when they actually act, they're going to be acting cautiously. They're going to respond to the data. I do think they're going to do 75 basis points. I agree with Bullard that if you're going to raise rates, let's get it over with. Let's front load it. And I think the markets want to see it front loaded as well. And I think 75 is a pretty good rate increase. Gets us into restrictive area. And then a pause would be probably a good idea.
Okay, Ed, good morning. But, so how to approach the market? Because there's a bit of a view building up that the recession in the US would be a mild one. And with the front loading of rate hikes, the market may actually price in all the negatives by, may have already done it actually. Your views?
I think it has. I agree with you. I think it has. I think this is the most widely anticipated recession of all times. And that means that it's either not going to happen because everybody's being careful, or if it does happen, it's likely to be pretty mild. To me, it looks like a rolling recession that kind of rolls from one sector to the other. Housing right now is really the epicenter of the recession in the United States, but the consumer is still spending. Capital spending is still growing. I think by the second half of the year, housing might very well hit its lows. Autos may actually strengthen as the supply chain disruptions ease. And meanwhile, the consumer may very well continue to spend. So it's very possible we won't have a recession. And even the technical recession in the first half of the year may very easily be revised away by the data that suggests that it may be understating the strength of the economy.
Okay, so it's possible that we may not have a recession after all in the US. That's your view. Taimur, that brings us back home, right? I mean, India's growth has been very strong, and this robust growth perhaps gives the RBI room for more rate hikes through the course of the year. What are you penciling in this time?
Right. Of course, there is plenty of room for RBI to attack the current account side of the economy. Imports need to slow down. Of course, some of the high cost of import is a function of price, not necessarily volume. But even when you take the price away, there is need for moderation of demand, and that can come through the interest rate channel. And therefore, a couple of more 25 to 50 basis point rate hike from the RBI seems to, from our perspective, par for the course for the remainder of the year. Again, the RBI astutely has developed a wide range of tools over the last decade or so to handle monetary conditions. So the liquidity operations that the RBI does, and I look at it from a cross-country perspective, very few central banks are as adept as handling the repo market, the demand for liquidity, the way RBI does in the emerging market space. So it's not just the blunt tool of interest rate hike, but also how it carries out its money market operations through the wide range of the instrument that it has, I think would be critical to watch as the monetary conditions are normalized. And of course, the pocketbooks among Indians have been hurt badly by the high cost of food and fuel. And the central bank cannot just say that, well, that's supply side and there's nothing we can do. I think overall inflation has to be brought down, and the RBI has to be seen doing that. It is deploying all the tools at its disposal.
So I asked you this question, Taimur, preempting your response to the GDP question, right? Because the expectation is that for the June quarter, the growth is going to be very strong. Some are forecasting a Q1 GDP growth of even 15%. What are you looking at this time around? And how do you think things could shape up through the course of the year in terms of growth?
Right. So some of it is, of course, base effect driven. Our nowcasting model is showing actually 16.2% growth for the April-June quarter. But of course, then we will have a huge payback in terms of base effect in the following quarter, the ongoing quarter, and will come down to 6%, which from an arithmetic perspective sounds more of like a reasonable number than the one that we'll get for the April-June quarter. So putting aside all the base effect and arithmetic, India is on course to grow at 6-7% clip. We are seeing the best indicator of that being underscored at the very robust GST collection number. Nothing displays the vigor of an economy than the formal sector's revenue collection. It tells you that formalization is working. It tells you that businesses are okay paying those taxes because their revenues are also commensurately going up. So after a couple of years of very challenging conditions around the COVID lockdown, this is the year for the reopening dynamic to work very much in favor of India.
All right, we'll leave it there. Taimur, great to have you with us here. If you come to Bombay, give us a shout. Would love to have you with us here in our studios. Appreciate it. Ed, it's always a pleasure. Thank you very much for being here on the program, as always. Thanks indeed. Well, we'll take our